Hey guys, Karim Babay here. This is the last video I'll be doing on the tariff series. I think, in my opinion, that chapter is closed. So I'm going to provide you with two things. One, lesson learned, if at all, from engaging in these tactics without really measuring the consequences and creating what we call the sensitivity analysis, which I will elaborate on it in more details in a bit. And two, my prognosis regarding the capital market. So let me start with the first one. In my opinion, having waged this unnecessary tariff war without actually measuring the consequences or actually coming up with an alternative to the American people or all the stakeholders was a major mistake. Not because I'm against tariffs, I think tariffs have their place, but because we didn't do our homework. Our homework is, one, what are the repercussions on any action we take, whether we raise tariffs on the capital market or on the political scene. As you can see, President Trump got a lot of pressure from major business leaders who are running publicly traded companies and are mostly affected by the whipsaw we saw in their stock prices. Had he come up with a plan, which is, hey, we're going to stomach this in the short term and medium term, but in the long run, this is what I'm going to be promising the American people or the business leaders that helped me win the presidency, is more jobs, perhaps more tax cuts, just to kind of show them a path so he can hold his ground and say, we got to fight this once and for all for the better goods of the American people. In my opinion, major mistakes. We do sensitivity analysis and we run scenarios on anything we do when we look at an investment. I don't see why President Trump, who's kind of assembled really like a marquee team of extremely high IQs, could not do such an analysis and come up with really a plan and an alternative and a game theory, meaning if China reacts this way, we're going to react that way, etc., etc. But true, we actually did not really understand the Chinese. I'm a little bit surprised. China, having a long history of communism and central planning, they're pretty good at actually planning for 50 years or 6 years, even if it's wrong. But they're pretty good at coming up with big plans. That's part of their DNA that they have inherited from running a communist regime. Now they layered capitalists on that, so they can actually withstand. They don't have the political bureau have no one to answer to. They don't have a 4-year electoral cycle the way we have it, and therefore, they can do anything they want. And look what they did to their tech sectors in 2017, 18, 19, 20. So we should have kind of expected them really not to bite kind of the bullet or to withstand their ground, and even if it comes at the expense of their economy. So they won because they say we're not going to do anything else. We're not going to even counter. This is the worst thing in trading, right? I mean, if you think about trading, is you want to buy something and you expect the other party to come back and negotiate. They thought we're not negotiating, so it leaves us with a position to literally negotiate against ourselves, which is the worst position you find yourself into as a trader or a deal maker. So unfortunately, we miss our opportunity to really come up with an unbelievable plan and make it really work. Can we salvage that? We can. I mean, I'm a big believer you can do anything, but I think the train has sailed. Which leads me to my second point. What are the repercussions on the capital market? I think the capital market, has already discounted the effect of tariffs, and then it kind of swung all the way back up when President Trump decided that he's going to put a moratorium first, and then he's going to negotiate with China, even though China said that we're not negotiating with you. So they're also killing our credibility. I think, in my opinion, in my 20+ years in investing in the equity market, it will normalize. I think, unfortunately, we'll go back to pre-tariff conversation, and I think the market will realize that, and the market will, we've already discounted that. We're probably going to have a mild recession, if at all, if we continue. But then I think we're going to revert back to our original stance, and the market will do what a market usually does. And if we lower the interest rate, then we're going to have a liquidity injection in the market. Then we're going to have good market conditions in general. So this is my 2 cents. So I think we hope we learned one thing or two when we engage in action that we have not measured or analyzed the consequences, and second, I think the capital market will just be fine because we think we're going to go back into the pre-tariff era, and we're going to carry on. So that's it for this series, for this video. Don't forget to subscribe. If you like what you saw, please don't forget to provide us with your comments so we can keep it engaging. Thank you. Until then, have a wonderful day. Bye.